This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China is expected to account for around 40% of the increase in global oil demand this year as its economy emerges from strict lockdowns, but the increased use will not take prices back to 2022 levels, consultancy Wood Mackenzie said on Thursday. In a base case scenario, China's economy will grow by 5.5% this year after it lifted its COVID containment strategy, Woodmac said in a report. This would equate to 1 million barrel per day, BPD, of a 2.6 MLN BPD increase in global oil demand this year. A high-growth scenario, under which China's GDP rises by 7%, would add a further 400,000 barrels of oil per day of Chinese demand, the report said.
U.S. crude oil stockpiles rose unexpectedly last week to their highest in nearly 2 years, while gasoline and distillate inventories fell, the Energy Information Administration said on Wednesday. Crude inventories rose by 1.1 million barrels in the week to March 17 to 481.2 million barrels, their highest since May 2021. Analysts in a Reuters poll had expected a 1.6 million barrel drop. Oil inventories have mostly built since mid-December, the data showed.
Moving on to the top news in the energy sector.
China's plans for some 100 new coal-fired power plants to back up wind and solar capacity have sparked warnings that the world's second biggest economy is likely to end up lumbered with even more loss-making power assets. Analysts question the logic of policies that intend to reduce the role of the dirtiest fossil fuel but at the same time require more coal-fired power plants to be built, especially given that only a small number of older plants are typically retired each year. The plans also highlight how local government interests have impeded the development of an effective nationwide power market that would allow surplus power to be delivered to regions that need it, they add.
French power availability was reduced by 21 gigawatts, GW, at nuclear, thermal, and hydropower plants on Thursday by the continuing strike against plans to increase the French retirement age, a union representative said. Maintenance was also disrupted at 11 French nuclear reactors, including the Penly 1 reactor, the representative added. Next, we have the top news in metal markets. Goldman Sachs on Thursday raised its gold price forecasts, describing it as the best hedge against financial risks, and reiterated its bullish view on commodities as a banking crisis has yet to spill over into physical markets. It hiked its 12-month gold price target to $2,050 an ounce from $1,950, joining others such as Citi, ANZ and Commerzbank in raising forecasts. We believe the market will be well supported not only by ETF, exchange-traded fund, inflows once Fed fund rates have peaked but by a stronger wealth effect from the East as the USD depreciates into year-end on yield compression and MGDP grows strongly on China reopening effects, the bank said in a note.
Singapore iron ore futures reversed course on Thursday, as a much weaker than expected demand for steel dented sentiment. The benchmark April iron ore on the Singapore exchange traded 0.72% lower at $119.40 a ton as of 0704 GMT. The most traded May iron ore futures contract on Dalian Commodity Exchange, DCE, ended daytime trading 2.01% lower at 854 yuan, $125.25 a ton, extending losses for the fourth day in a row and the lowest since February 14.
We will now look at the top news in the agricultural sector.
Malaysia has maintained its April export tax for crude palm oil at 8% and raised its reference price, a circular on the Malaysian Palm Oil Board website showed on Thursday. The world's second largest palm exporter calculated a reference price of 4,031.45 ringgit, $914.16 per ton for April. The March reference price was 3,710.35 ringgit a ton. The export tax structure starts at 3% for crude palm oil in a 2,250 to 2,400 ringgit per ton range. The maximum tax rate is set at 8% when prices exceed 3,450 ringgit a ton.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.